My name's Ned Bell. I'm the Chief Investment Officer of Bell Asset Management, and today I'm very pleased to announce that we're going to be launching the Bell Global Sustainable Fund. The fund is going to be a representation of our concentrated global strategy that we've been running for more than 5 years, that actually has the best ESG characteristics of all the strategies we offer. So ESG has been something that we've been integrating in our process for a number of years, for well over 10 years for institutional clients. We've got a long history of managing strategies with ESG screening out the likes of tobacco, coal, cluster munitions, uranium, adult entertainment. So we've been doing this for the institutional market for a long time. And after a lot of thought in the last year or so, we've come to the conclusion that we want to offer one of these strategies to the retail wholesale market. And that's what the Bell Global Sustainable Fund is. So essentially, it's an investment strategy that'll hold 30 to 50 names, predominantly in developed markets. ESG actually tends to keep us away from emerging market companies because they tend to not stack up very well. When we look at our actual investment approach when it comes to ESG, I describe it as it's a very pragmatic, integrated approach. And what I mean by that is it's integrated in that we screen out particular sectors at the beginning, but then as we move through the process, we look at every single company through the prism of the key ESG risks that we think are most prevalent for the company in question. And ESG is also part of our overall quality test. So it's one of the 6 factors we look for. If we think that there's too much risk or a company's not addressing the ESG risks that are in front of them, we simply will not invest in the company. So the bar is very, very high. And then from an outcome perspective, I think very importantly, our portfolios, this particular strategy we're talking about today, from a carbon footprint perspective, the carbon footprint is 76% below that of the benchmark. So it is very, very low. And that is very much about making active decisions. Screening out some sectors and companies gets you a small part of the way there, but our approach is a very active approach. We gravitate towards companies with low carbon footprints and away from those with high carbon footprints. So I think that's really, really important. From a more general environmental social governance perspective, our overall ESG score of this particular strategy, using one of the major research providers, MSCI, it's a AA rated strategy, which means it's in the leadership category. So I think that's a good external validation of the magnitude of quality, of ESG quality in our portfolios. And also very importantly, our ESG scores for our broad cap strategy or our core strategy we've been managing for more than 10 years has been above that of the benchmark for 10 years. So really importantly, as much as ESG is becoming very popular of late, we've been managing ESG sensitive strategies for a very, very long period of time, and it's something we take very seriously. I also think importantly, a big differentiating feature about the Bell way of managing ESG is that it is integrated right through the investment team. It's not one person in the investment team. Every member of the investment team has ESG responsibilities, and it's very much about engaging with companies, understanding the key risks that face those companies in particular, and making sure that they have a proactive approach to addressing and reducing those risks to the extent that they can. So it's a really exciting strategy we've been managing for our institutional clients for a number of years. We think now is that the time is right to bring this strategy to market. It is we think it's quite unique, it's quite different, and comes with a very, very high bar from an ESG perspective. But very importantly, from a pragmatic perspective, it doesn't mean that we're only investing in what I'd call the picks and shovels of ESG. We're not just investing in wind and solar, we're investing in companies that a lot of you would be familiar with, but these companies are the ones that they will reduce the ESG risk in front of them as much as they possibly can. And the end outcome, again, is a very high quality score. We don't have any exposure to any of the poorer or the laggards, according to the major research providers. We don't have any controversial exposure to, again, the likes of tobacco, coal, cluster munitions, those sorts of things. And again, gravitate towards companies that embrace ESG. So it's a really exciting strategy. We're thrilled to be bringing it to the market, and we look forward to continuing our discussion with you on the Bell Global Sustainable Fund. Thanks again.